Good evening, everyone. Good afternoon, good morning, wherever you are. So we're going to look at bond yields and whether rising bond yields could mean the end of the precious metals bull market today. Yeah, we've got already 22 thumbs up, 69 people. Hello, everyone. Nice to see everyone here. Can you guys hear me well? Good. It seems like you can. Mr. Guppy, Lorraine from Weymouth. Lorraine Weymouth from Spain, in Spain. Cupid Stunt, Billy No Mates. Yeah, Billy's doing really well. His eyes are pretty much cured. It's more the right eye, really, where he got an ulcer. Hoogie Coogie. Katie from Pittsburgh. 903 Boater from Michigan. Pablo Pina. Hi, Pablo Pina. Dilwyn Roberts. I think you're in Wales, aren't you? Norman Liu from Spain. Parbar. Yeah, great to see everyone. Yeah, that's always a question or something that people talk about. I would say also the algorithms that run a lot of the hedge funds and that traders use, they probably see rising bond yields as negative for gold. But I would say the most important thing for gold in terms of yields is the real interest rate or the real yield. And I think real yields are going to remain negative or near zero for a very long time. We heard back in September, Jay Powell said they're gonna keep the Fed funds rate near zero for another 3 years at least. There's a lot of talk now with a 10-year yield approaching 1%. That there will be what they call yield curve control. And I want to talk about yield curve control and the cycles in the bond market. I will probably make a video about it so people can look at the charts more easily. Right now, I'm just going to talk about it. I've had a look at the 10-year yield going back to 1912. And the 10-year yield peaked just after the war at around 5.3%. Let's see what it was. It peaked in 1920 at around just below 6%. So during the war, it was below 4%. Then you had like a yield really spike. So bonds dropped and the 10-year yield went up to like 6% in 1920. So we did have a depression, a quick depression or a recession in the early 20s. Government didn't intervene or anything, and the country was out of the recession very quickly. But what I'm trying to say here, from 1920 until 1954, so 34 years, basically bond yields were dropping like that. Of course, at the time, the price of gold had been revalued in 1933 from $20.67 to $35. And then basically from 1940 till 1954, with the exception of a spike after the Korean War in 53, bond yields, the 10-year yield never went above 2.5%. That's because the Federal Reserve was doing yield curve control. They were doing QE and keeping interest rates low to pay for the war, World War II. So after 1954, yields started going up all the way to 16% in 1980, the 10-year yield. Of course, up until 1971, the price of gold was fixed at $35. But I've had a look after 1954 or thereabouts. U.S. gold reserves started dropping. That's because people knew that the system was being inflated, yields were going up. So actually, gold was being driven out of the system, or the trading partners of the U.S. were demanding gold because they knew there was inflation. So when they let gold float, or Nixon closed the gold window in 71, you saw the gold price explode because it'd been capped down. And that was despite the bond yields going up from 2.5% in 1954 to 16% in 1980. And since 1980, we've had a bull market in bonds. And so it's been like 40 years. So it's a lot longer than the 34 years. But I think they're manipulating it now. And I've had a look as well. In 2017, Jay Powell started raising rates, the Fed funds rate. He was able to raise it. Let's see here. I'll let you. So he raised it. Janet Yellen raised it once by a quarter. And then in the beginning of 2017, Jay Powell started raising it. And by the end of 2018, he'd raise it from 0.5% to 2.5%. He'd also started unwinding the balance sheet in the beginning of 2018. But then the market was collapsing, so he had to reverse everything. And also the 10-year yield had gone all the way up to 3.25%. So everything was going to implode, so he had to reverse everything. So I think there's two things that could happen to yields right now. They're going to keep yield curve control. I don't think they can let it go much higher than 1.5% or 2%, the 10-year yield, or else everything would come crashing down. So they're going to keep doing QE to keep interest rates low. But even if they lost control of yields and yields started going up, I think it's going to be different because yields going up now, it's going to be unlike since the 80s until now, where we've seen lower highs in the yields and lower lows, like yields going down like that. When yields start going up now, it's going to be a bear market in bonds, and yields are going to go a lot higher. And that's what we had from the mid-50s to 1980. And it was the best time to hold gold and commodities. If you could, of course, in the US, it was still prohibited to own gold. So that's why I think people are going to be wrong. People who think that yields, higher yields are going to end the precious metals bull market. I think it's far from that. We're going to have probably the stagflation. I think we're already having the stagflation we had in the late 60s and the whole of the 1970s. So yeah, I personally am not concerned about bond yields rising. And I think the Fed's going to stay behind the curve. They're going to try to keep rates low, even though their so-called measure of inflation, CPI, is going to be higher than rates. So that's going to be negative real yields as well. So yeah, nothing is for certain, but I don't think they'll be able to maintain the kind of environment that they have in the bond market since 1980, i.e. a bull market in bonds. And the only way to maintain that, of course, is going to be a lot of QE, and that will be artificial. And gold going up is like an escape valve for that. Just like gold reserves in the US went down from 1955. I've got the numbers here, gold reserves. So back in 1955, US gold reserves, or just after 1955, they were just above 20,000 tons. Then they started dropping all the way to the early 70s to the current 8,000 tons. So that's how foreign countries dealt with the inflation of the mid-50s to the 1970s or early 70s. They asked for a redemption in gold because they knew the US government was inflating. And I think they're going to do the same thing. Well, they've been doing the same thing, of course. So that's how I see. That's why I don't think people should be concerned about rising bond yields, because the central bankers are going to make sure they control those bond yields, because there's so much debt in the system. That's the problem. And government has become so big as well. and it's crowded out the private sector. So we're not going to get the growth that we got in the 50s and 60s. So I think yields, if they lose control, though, it could go a lot higher than they went in 1980, and that would be a total collapse of the system. And we saw back in 2011, 2012, when the countries of Southern Europe, when we had the sovereign debt crisis, yields spiked to like 10, 15% in Southern Europe, and the gold price went through the roof in euros. So I wouldn't be concerned. So now that's it for the bond yield question. And I'll take some questions. I'll take questions from you guys now. And yeah, let me have a sip of my water. I've got my Christine Lagarde and the ECB mug here. I've got it in French and German, and I've got Christine Lagarde behind bars, of course. It's in the Teespring store, by the way. All right, so I'll take it easy now. I rambled on for about 10 minutes about what I think about the bond yields and gold. If you've missed it, if you're late, you can always come back when this is finished, and this is posted on YouTube as a recorded live stream, and listen to the first 10 minutes. I think that's the best thing to do. Ben Gray, Dilwyn thinks USA gold is in China. Jeremy W., do you think Bitcoin will be outlawed or regulated when they bring a new system online? It's difficult probably to outlaw Bitcoin because it's a computer program. You'd have to arrest all the programmers. But there's already a lot of regulation. If you want to exchange Bitcoin in an exchange for other currencies, like fiat currencies, you already have to be, there's a lot of the exchanges of the last 2-3 years, you have to give them your address, you have to give them your, like an ID, so they need to do KYC and the anti-money laundering. So it's already very regulated, but banning Bitcoin, I don't think it's possible to outlaw it, unless they go around and just arrest all the people that program Bitcoin, but that's very difficult to ascertain, I would say. C. Xavier says gold is down about 14% from all-time highs. Yeah, it is a nice. That's what a lot of people were expecting. Waiting for buying the dip opportunity. I personally, yes, sometimes if I do have extra fiat and the price gets smashed like it did, I'll take the opportunity to buy gold or silver. But I think people shouldn't really put too much emphasis on buying dips in gold, because I think fiat currencies are going to drop so much that does it really matter if you buy it at 1800 or 1700 when it's going to go to infinity, in my opinion. So there you go. I wouldn't be too picky, unless you're going to trade it, of course, and that's a different story. Pat, after a crazy last 2 weeks in precious metals market, and with the M1 supply going up so fast, what is your end and year-end prediction for gold and silver? Yeah, those questions are always a bit tricky, aren't they? To make, well, okay, I'll have to take I'll say gold will be around 1900, maybe 2000, thereabouts, and silver will probably be around 30 or 35. So that's my year-end prediction. So I put my neck on the line there. Guroji, my Norwegian friend, thank you for the super chat. He says, I'd rather have 1 million unanswered questions than one answer based on a lie. Okay. It's a question. Trying to Yeah, you don't like lies. That's I don't either. uh, Brady Girding, we don't use CBD oil, no, Billy or I. Platinum, I made a video about Platinum Skinny Bee yesterday. Yeah, it looks like it's breaking out. I was speaking with someone I know who actually follows the videos, and he was telling me of some possible investments in Platinum. One of them is the ticker is NI. I'll write it down. It's on in the NILSI. The other one is ETF, PPLT. I'm not into ETFs, but you know, the Platinum for me would be more of a trade. Uh, I'm not really sure I want to hold physical Platinum. I'm not really into ETFs for gold and silver, but that could be a way to get into Platinum. Also, Anglo American. They're involved in all kinds of metals, Platinum included. So yeah, Platinum is looking good, I think, and Platinum usually follows gold and silver, and it's been lagging, and it looks like it's breaking out, just like silver broke out through that 2021 level earlier this year. The 1,000 or 1,100 level in Platinum looks like the same kind of possible breakout for Platinum. Pablo, I think copper is up, and a lot of the other base metals like nickel, aluminum or aluminum, lead, they're all going up. It's more of a dollar thing. With the dollar going down, everything priced in dollars goes up. Yes, the dollar index closed below 91. A lot of people think it's time for the dollar is due for a rebound. And I've read some research saying if the dollar doesn't rebound this coming week, it could be very negative. I think that's what commodities are pointing to a weaker dollar. And I think the Chinese economy, for example, it's the only economy that's grown this year and is supposed to grow at 7% next year. China is still a huge developing country. It's still buying a lot of commodities. And I've also heard that China and countries like Egypt, they're stocking up commodities like wheat and other things because I think they know the dollar is going to go south because the stimulus is going to continue not only fiscally but monetarily. Hopefully that answers your question. Pabar, do you think the lockdowns are affecting contract deliveries for central banks? Contract. What kind of deliveries, Pabar? I think they're affecting everyone, probably central banks included. Is that deliveries for precious metals or for banknotes? I'm not sure what you mean. Dilwyn Roberts, George Gammon says gold and Bitcoin are irrelevant. Okay, I don't listen to George Gammon, so I couldn't say. I don't listen to that guy. So there you go. Mr. Guppy, this week I noticed the 30-year JGBs are trading at a 1-year high. Is that in price or yields? They're losing their magic spell. People don't care anymore if BOJ is buying them. This is a sign of big trouble coming. Yeah, it could be. Let's have a look at I'm just going to bring up, have a look myself at JGBs. And I'm going to tell you a story about the JGB futures that I used to trade when I was a futures broker for my clients. Let's see, the 30-year JGB. Yeah, I see here that, let's have a look. Yeah, they are picking up. I mean, late in the beginning of middle of last year in August, they were like the 30-year yield was at 0.14, and it's now at 0.65. It's still very low, but it is picking up the 30-year JGB yield, and I see that the 10-year yield is positive, like 2 basis points. So there's still a lot of room for it. Gold and silver deliveries, that's what Pavar was asking about. I don't know. It could be affecting the shipping of gold. I'm not sure central banks hold silver. I think the Russians do, but I don't think many other central banks do. War, I don't think so, Andy Hughes. I don't think we're going to see kinetic war. I think what we're seeing now with the lockdowns worldwide, this is the equivalent of war, in terms of how we've lost our civil liberties, and in terms of how they're indebting our country so much, because that's what happened during the war. So maybe we will get a kinetic war as well, and that will be even worse. So, but it won't change much, I don't think, or in my opinion. Skinny B, how do base metals and commodities historically do during economic pullbacks? Well, most people nowadays think that their prices should go down. But in the 1970s, we had what was called stagflation, where unemployment was high in the US, inflation rate was high, and commodities went through the roof. So, and I think that's what a weaker dollar is telling us. Even if the economies are really in a depression, like a lot of people think it's going to be, Jim Rickards coming out with a book, The New Great Depression, I wouldn't be surprised if commodities actually went up. That will make the depression even worse. It will make things even more unaffordable for the general public. And there's a guy that I've interviewed a few months ago. He's Brazilian, like me, Tavi Costa, and he likes doing relative charts, like relative value comparison. And he's got some charts, and not only him, showing that commodities have been commodities are the most undervalued versus paper assets or stock market in like 120 years. And yes, stock markets could keep going up, but if you see a big, like not even big, but a significant chunk of all that money that's flowing around, where people get concerned about the stock market being overvalued, if you get some of these people go into the commodity sector, you can see commodities go through the roof. And commodities are finite, unlike paper, right? So yeah, so I hope that answers your question. Commodities can go up during a period of slow growth, and even during a depression or a recession. A lot of the Keynesians were really surprised in the 70s that we had high unemployment and high inflation, because they thought it couldn't happen. And the Keynesians are still around, and they run, they're the ones that are listened to, the central bankers. They're all Keynesians. And they probably think it's impossible to have a Great Depression and high commodity prices. So I think that's the best bet, I think, going forward. Max Intel, I don't follow the Pfizer trials. I think they're finished here in the UK. They're already, the regulator here, the MHRA, that's supposed to approve vaccines and medicines, they've approved it already. So the trials are finished, even though I think I would like to see trials last over a few years before taking a vaccine, to be honest. But that's a different subject. I'm sure there's a lot of other people out there covering that. Have you watched the Arcadia Economics video with Nick Barishev, Ross Martindale. No, I haven't, but I've yeah, Rick Barashef is an interesting guy. He's been on King World News many times. Years ago, I remember listening to him, but I haven't listened to Nick Barashef with Arcadia. Yes, GeoFit, I did see that those 3 presidents are going to take the vaccine. There's a lot of public figures saying the same thing here, that they're going to do it. JM, as per the title of this live stream, you probably came on late to the live stream. I talked about it in the first 10 minutes. I'm not going to go over it again. If you want, this live stream lasts another 34 minutes or so. It's usually an hour. You can go back and listen to the first 10 minutes. It's going to be put on the on my YouTube channel, recorded live stream. Yeah, if you could do that. Now I'm taking questions from the viewers, but you could ask a question, I guess, related to bond yields. Let's see, Michael Chaz, thank you for your super chat. If treasuries are headed into a bear market, how will we be able to afford to pay interest on the debt? Are we headed to a massive tax hike? Well, yeah, that's a good question, and I think the central banks are going to do everything to try to keep rates low. How do they do that? Well, they just print they create a lot of reserves, and they'll buy a lot of bonds. And when they buy treasury bonds in the secondary market, it keeps yields low. They could lose control of it. And I think the next move higher in yields, and this will help the fellow who just asked about the rising yields. I spoke about how the bond market was in a bull market cycle from 1920 to 1954. It was like a 34-year bull market where yields basically were kept below 2.5%. And then we had a bear market in bond prices, and yields went from 2.5% in 1954 to 16% in 1980. And look what happened to gold after that. During that period, it went from 35 to 800. So I think if they do lose control of bond yields and the Fed can't keep investors from selling it, investors could sell quicker than the Fed could print, and you could see yields rising, but it would be a bear market, because I think we'll start seeing higher highs and higher lows, and that's good for precious metals. That shows that there is inflation and that the Fed is behind the curve, because if bond investors are confident of the monetary policy of the central bank, they will keep buying bonds. But if bonds get into a bear market, it means that investors are losing confidence in the dollar and the Fed, and that's bullish for gold. That's how I see it. What cryptos do I have? Well, I have a little bit of Bitcoin, but I also have I've got what's it called? Hive, some Hive coins. I've got DTube, and I got Library, because I post all my videos on those blockchain-based platforms. But and I have an investment that I made in 2016 with Simon Dixon, Bank to the Future. I bought Bitcoin Capital 3 funds, and that's a private fund, so I can't really liquidate it. But the money that I put in, I already got back, and they've got a big holding, that fund in Kraken, which is one of the biggest exchanges in crypto. So, but I personally prefer precious metals than Bitcoin, but and cryptocurrencies. But I do have some, and I know how to deal with cryptocurrencies, the wallets, the exchanges. And I think if people want to get involved in cryptos, they need to know that it's very volatile, very risky. Rumpelstiltskin, when I logged on today, I had an ad explaining that while personal debt is bad, national debt is good. Yeah, that really makes sense, doesn't it? If it's bad for people, why should it be good for the nation, right? The nation is made up of people. It's a complete fallacy. I guess the Japanese government needs to justify that. Joker Alpha, thank you for your super chat. Would freezing the printing press nations go into default and allow banks to fail be right thing to do to avoid economic collapse? Well, if you freeze the printing presses, you will have economic collapse. There is no way out anymore out of currency or financial collapse. That's the quicker option. That would be better, Joker Alpha, because we get it done quickly. We implode everything, but yeah, there would be a lot of mayhem, social unrest. The other solution, which, well, it's not a solution. The other outcome is what they're doing. They're going to keep inflating, printing, financing the debt with more debt, and what you're going to get is what von Mises said is the crack up boom or the hyperinflation, where people will eventually lose confidence in the currency, and then you're going to get a collapse like that as well. Either way, it's not good. Either way, I think you need to hold on to your precious metals. And if you want, hold on to your cryptocurrencies. Yeah, my money is on precious metals only because they've had a 5,000-year track record in maintaining their purchasing power. Daniel P, everybody buying stocks right now. Time to sell soon. Yeah, I read an interesting article. I recommend it. I like the guy, Egon von Greyerz. He wrote something that King World News published, and he thinks, yeah, we could still see the stock market go up a lot, but they're gonna suck as many people as they can into it, and then it's just gonna go. It's gonna drop massively, especially versus real things and precious metals, of course. Lily Robin, hi Lily. Wake Billy up. Have you heard of Neil McCoy Ward? He's in London and would be great show if you had him to talk London. I think someone sent me a video by this guy, McCoy Ward. I think he was a real estate agent, and I think my wife was watching him the other day. He has a lot of subscribers, yeah. Tricky Dicky, thank you for the super chat. Billy, Lily wants to see you. Billy, come on, they want to see you. He's awake. He's doing well, though. His eyes are a lot better. Yeah, Graham Hobbs says Neil is a good, grounded fellow. Yeah, I'll try to look him up, see if I can get in contact with him. Lord Humongous says he likes him. Debbie Hewson, stocks will go to infinity. Well, you know, I did a video a week or so ago, maybe a little longer, and I noted how the Brazilian stock exchange, the Bovespa, is gone from about 8,000 back in the mid-90s, and now it's 110,000. But the currency there has dropped a lot as well. So yeah, we could have the Dow at 50. Excuse me, we could have the Dow at 50,000, but we could have gold at 20,000. So, and I think that's what could happen. But the currency in which the stocks or the stock market will be valued in will be kind of worthless. Silver bones, yeah, Billy loves silver bones. Lord Humongous, I'm drinking coffee out of my Billy Silverbug mug. Good. I bought a mug the other day from a guy who does YouTube channels about golf. He's a young guy. He's quite funny, and he's a good instructor. So I got some tips from him, and I bought a mug from him. Billy, let me see if I can get him up. Billy, come here, boy. Here we go. Say hello, Billy. You see his eyes are a lot better. There he is. Good boy. Whoa. He's back on the sofa. Jim Dig says my winter taxes went up $50 from last year. Yeah, I think the local taxes here, they call them the council taxes. They're going to go up for the whole of Greater London, and I think they're going to do it also because TfL, which is the Transport for London, they went bust. The government had to bail them out, and you can bet they're going to raise taxes for. They're going to put it in the council tax. So yeah, so it's not just you there, the $50. Michael Chaz, yields up won't hurt gold. They can just get yield. Not sure what you mean by they can just get yield. But what I've said is that the next time yields start going up and the central banks lose control, we're going to have a bear market in bonds. And a bear market in bonds means that investors don't have confidence in the central bank, and that's positive for gold. In the 1970s, you had a bear market in bonds. Yields are going up. And why do they lose confidence in central banks? Well, because they know that the central banks are inflating faster and at a higher rate than the yield that you get. So the real yields will be negative. So gold will still be more attractive. They're going to be what was called in the 70s certificates of confiscation. That's what bonds are going to be. In the 70s, for example, let's say you bought a 10-year yield, a 10-year bond or note, and it gave you 8% yield, but the inflation rate was 12%, you're losing 4%. So I think that's what will happen next. But I also think they're going to try to keep yields low by printing money and buying bonds. And we know that that's positive for gold. My favorite coin, I have quite a few because I've been buying some old, like not bullion coins, but coins that used to circulate. For example, I like the pre-1920 florin, which is 2 shillings from the UK. I think it's a really nice coin. I like all the US coins, the quarters, the half dollar, the dollar. I also bought recently 1,000 reais, which was the silver coin from Brazil in the 1800s. And it's pretty much the same size as a florin. And it's really, really nice coin, as you can see here. Yeah, there's so many, and there's a 2001 Brazilian reais. This is from 1887. So a really chunky silver coin from Brazil when Brazil was still an empire. And it's pretty much the same. It's pretty much like a dollar, the weight. So there's so many different coins. Yeah, I like a lot of them. I mean, also, let's see, I've got here, I like the shilling is a nice coin, the British shilling. And I've got a 1962 quarter. There you go. And even the franc, the Swiss franc, when it used to be silver, that's a 1952 Swiss franc. It's pretty much the same size as a quarter. That's the interesting thing about silver. You look at all these coins that used to circulate from different countries. They have different names and different face values, but they weigh pretty much the same. They're kind of the same size. Michael Shaz, what would the implication if Fort Knox is empty? Well, yeah, that would be pretty significant. I think the dollar would drop even faster than it has been dropping in the last few weeks. Double floor and barmaid's ruin. That's a good one. Jim Diggs like the Standing Liberty quarters. I have a 1834 half dollar, which I bought from I think Heritage Coins, and I have a few other collector's coins as well. And I've got a couple of gold bars here. Let's see. I've got Engelhart 50 troy ounces. I keep it as a paperweight. And I've got Engelhart 10-ounce bar. This one's Billy's. He doesn't like me keeping it, but anyway. Yeah, Fort Knox. I think we might have more gold and silver than Fort Knox, actually. All the people in this chat. Switzerland, possible biggest gold reserves in the world compared to the population. Well, I haven't really calculated that. That's possible. They've got about 10 million people and 1,000. I think they've got 1,000 tons, but they did sell half of their gold a few years ago, the Swiss National Bank. I also like, someone sent me this a few weeks ago. They're quite nice. I'd never seen them before. It's a 1 ounce. It's a British coin. It's got the royal seal. 1 ounce. It's not a Britannia, but it's basically that coin here. That's quite a nice coin. It's from 2020. One of the viewers sent it to me as a present, I guess. It's nice. And I do have some Chinese silver coins too, some pandas they call them. This is yeah, silver panda there. Trade dollars. Yeah, trade dollars are interesting. Did you know that there was a British dollar, trade dollar? I think it was from 1895 to 1935. They minted British Empire dollars, British trade dollars, and they were used mostly in China and in the Far East. And it was exactly like the US dollar in terms of weight. Justin Timber, US DAT clock dollar to gold ratio is 32,000 per ounce. What does this mean? I really don't look at that. I think they must, I don't know, they're looking at the national debt versus gold reserves. I don't know how they work that out. It's not really important. What's important is what the price of gold is in the market. I know it's manipulated, but I wouldn't really look at those numbers in the US debt clock. I would look at the US debt clock to look at what the debt is, what the GDP is, all the other data. But I would forget about looking at the silver and the gold stuff from the US debt clock. Lord Humongous says he wants to get some Britannias. Well, can you get some in the US, Britannias? I'm sure you could. Your opinion on Fed inflating the money supply and bubble it's creating? Well, that's the only thing they can do. I mean, what they do is they create reserves and then out of thin air, because that's what they call money within the banking system, is called reserves. With those reserves, they buy assets from the banks. It could be treasuries or mortgage bonds, and then The banks send the bonds over to the Fed, and the Fed puts it in their balance sheet. So the bigger the balance sheet gets of the Fed, it means the more reserves are flowing into the banking system. And then the banking system has reserves. They can put it back with the Fed. There's an account, excess reserves with the Fed, where they earn interest, or they can lend on the back of those reserves into the consumer. And they can lend it 10 times or as many times as they want, because required reserve now is like 0. So, yeah, it's not going to end well. The Fed's been doing this since Bernanke made his helicopter speech in back in 2002. That they can just keep creating reserves and accommodating monetary policy since 2008, except for a period there where Powell raised rates from 0.5% to 2.5%. Except for that year there, we've had rates basically at 0. So it's a horrible policy, and they can't get out of it anymore, and that's why it's so bad. Oh, there he is. He got up. Billy. Billy. There he is. He's awake. Charles Patterson on Ethereum. Hi, John King. Ben Gray, 51st birthday. Good. Picked up some 3 silver eagles, a panda, a koala. Last were for my daughter, her birthday. Yeah, I have some koalas as well, pandas. Ethereum. Well, I think Ethereum is too slow. Ethereum basically is Bitcoin, but with a smart contract. So you're supposed to build applications on Ethereum, and I've used Ethereum a lot in the past. But Ethereum 2, yeah, I think that's a little bit like, well, yeah, I want to use the word scam, because people have pumped millions of dollars equivalent into Ethereum 2, and it's going to take 2 years to get Ethereum 2 running. And what's Ethereum 2? I think it's a Ethereum that's faster and more scalable than the present Ethereum. So yeah, I think yeah, that's what Ethereum is. I think if you want to get into, well, Graham Hobbs says it's now available. I think from what I've read, Graham, is that it's available for you to back it, but it will only really be running in a couple of years. I don't think it's ready yet for use to build applications. I think EOS would probably be better. It's much faster and it's much more scalable, but some people think it's too centralized compared to Ethereum. So there you go. I do know about cryptocurrencies a bit, but anyway, I think the technology is good, the blockchain, and I think platforms like DTube, Hive, Steemit, I'm not sure what happened there. I'm not really involved in that so much anymore, but I think those platforms are really interesting, and you can earn cryptocurrencies, and I've been earning quite a bit. Not a lot, but through DTube and Hive. If I post stuff and people like it and they vote it up, I earn in those cryptocurrencies. There you go. Pix Gaining, where do you think silver prices will be in 10 or 20 years' time? I don't know. It's difficult to say. We might not even have a price for silver. Silver might be running again as money, so things will be priced in silver. Who knows? It's difficult to say. Yeah, so Neville Mead, any advice regarding inheritance tax with physical gold? I'm not a tax advisor, but I would say that if you planning to leave, like let's say sovereigns or Britannias, just put it in. Just give it to your to whoever you want to leave it to 7 years before you die. I'm not sure, but what I would do, Neville Mead, I would contact Oliver Temple. Yeah, at Gold Investments. Gold Investments is the bullion dealer that people can use my promo code if they're interested in buying gold. And I always tell people to do their homework to get the best deal. But if they do want to help the channel, if you use my promo code there, it helps the channel. But Oliver Temple, his Gold Investments, they've been in business since the 1981, and he knows all about that. So just go in the description of my videos, and there's a link to Gold Investments. It's goldinvestments.co.uk. You can phone him and ask him about that. He knows all about that. Yeah, he would be the best guy to answer that question. You can call him tomorrow. I think he'll be in the office at 9:30 or 10, and you can ask his brother as well. Lily Robin, I like this setup. We can see a window. Oh yeah. Yeah, I think we moved it around a few months ago. I was talking. My desk was over there, and you could see the wallpaper a little better. But my wife said, "Why don't we change things around?" Victor Claudio, they do serve international customers. The Gold Investments will ship anywhere in the world. So yeah, you can look them up. You're welcome, Neville. He knows quite a few things that you can do with sovereigns and Britannias in terms of tax, and they're all legal. But the major thing is that they're legal tender coins. They're not like they're legal tender, of course. So we got still about 10 minutes. Apex. Have I used Apex? I think they're based in the US, aren't they? Or Ampex. I haven't really used. It's easier for me to buy precious metals from UK dealers. With the US, it's more difficult. I did buy back in 2007. I bought from the US Mint. I bought some 1-ounce buffaloes that came out that year, and I still have them. But I don't think the US Mint allows foreigners to buy coins from them anymore. So no, I haven't used MPEX. Bullion Vault, I did use Bullion Vault years ago, and I have an account with them, but I've got about £1 worth of gold with them. But they don't do physical delivery, so they just Bullion Vault only follow the price. So if you really want to have physical gold, I don't recommend Bullion Vault. I still get an email from them every month. I think the latest one said I had 97p worth of gold. So yeah, Bullion Vault. And I've heard the Rothschilds are involved, so that put me off. That's why I don't use them anymore. Dilwyn Roberts has a Bullion Vault account. Yeah, have you asked them, Dilwyn? I'm not too sure whether they will deliver if you say, I want my gold. I don't think they will. And I think in this day and age, we want to have physical gold. Lauren Bolo, interesting interview with Lynette. Yeah, I enjoyed speaking with Lynette. Yeah, she's. I really enjoy chatting with her. I think that was my second or third. I need to ask her to come on my channel. Pix Gaming. The Rothschilds used to own the Royal Mint. They don't anymore. They sold that off in 1968. The Royal Mint. So they don't own it anymore. I do have a Rothschild bar, gold bar, Royal Mint Refinery. That's what it was called. But they sold it in 1968. And then I think the government took over it. Jules Signoret, are you aware of the news in Georgia, Dominion machines? I'm aware of all that's going on in terms of the politics in the U.S. I'm listening to both sides. The mainstream media in the U.S. make it seem like Joe Biden is going to be the next president, and the alternative covers, the dispute, all the Georgia, Michigan, Pennsylvania, Arizona. I'm aware of all of that, and I think it could be a huge shock to people who just listen to the mainstream media. And am I taking sides here? No, I'm just an observer, because I think this kind of shenanigans in elections has been happening for decades. Even JFK, his father used to know who be allied with the Italian mafia, and they stuffed ballots, I think, in Chicago, and that's why he won. So it's been happening for decades, but for some reason now, it's being brought back up. And I think it could be a shock to people who only watch or read the mainstream media. I don't think it's over, and I think it could create a lot of mayhem. And I think that's maybe what the dollar is telegraphing us, a weaker dollar. Tara L says Rothschilds own Bitcoin. Okay. Well, they must own some Bitcoin. I don't think they own Bitcoin. But anyway. Tony Vega, what's your thought on President Trump staying in power and remain president for the next 4 years? Well, I think we're going to see more of the same. A lot of debt, deficit spending, more inflation. It's not going to be any better. Look at how the poor are getting poorer in America. And I'm not anti-Trump, but I don't think he's the solution. The solution is something very painful, and I don't think President Trump is willing to to bring that on. The solution would be cold turkey in terms of the debt, living within your means, and I don't think he's that kind of guy. So yeah, I wouldn't be fooled into thinking if Trump stays another 4 years that things are going to be great. They're going to be tough, and that's why you still need to keep your eye on the ball and the fact that the dollar is going to get hurt. The dollar's dropped like almost 50% since Trump took over when he was inaugurated. So it hasn't been good for the dollar. The dollar, the currency of a country, is like the common stock of the country. So that's telling us that, yeah, they might say the greatest economy or he did well, but no. And I'm not like saying Obama was any better, because I think all these guys are all controlled anyway. I'm sure a lot of pro-Trump people won't like what I say, but I'm just trying to be honest about it. Yeah, Jim Diggs, I saw that. Jim Diggs won. I even watched Dr. Dave Janda. I like him. I hadn't listened to him for a long time, but he interviewed General Flynn. I think it was yesterday or the day before. It was very interesting. And there was another general, lieutenant general, calling for that, what you said there. Like martial law. Yeah, that's right, Joker Alpha. Stop spending, go back on a sound money system. You see, politicians and bankers, they and even people who benefit from the welfare, they hate sound money because they'll have to work for a living. Yeah, that's what we need, not only in the US, but here in the UK as well. The whole world needs it, really. Phil Frost, did you see New Finds of Gold in Wales? No, I haven't. I haven't seen that. I know, Wales historically is a great place for gold mining. A lot of the gold that's been mined in the UK was in Wales. I hadn't seen that. That's interesting. Maybe that's why they closed off the border. I'll take a few. Hi, Dilwyn. I know you live in Wales. I went to I think it was 2012. I went to Dogellith. It's spelled like Dogalau, but it's pronounced Dogellith, North Wales, Northwest Wales, and I think that's a big mining area. And I actually went there on my own, and I met this guy who he's a prospector, and he took me to a farm. He knew the farmer, and we went gold prospecting in the river. We were there for 4 hours. It was really interesting. Yeah, that's right, the Gelith. And I found a little bit of gold. I was really tired, but I've got it here. Where is it? So see, I've got a little bit of Welsh gold there. Yeah. So yeah. So some people say, well, what if they, with the gold price going up, we're going to see a lot more gold mining, and so that's going to lead to a higher price. But the thing with gold, and the reason it's money and it's so stable, is that there's 84 years of supply above ground. So even if they were to find a big gold strike, it wouldn't make much difference to the price, and it would take years to develop it. I listened to an interview. I think it was Lassonde, Pierre Lassonde. He was interviewed, I think, by King World News or someone else, or was Stansbury Research by Danielle Camboni, and Pierre Lassonde. He was CEO of Newmont Mining, really big, and he said, we haven't had a really big gold strike in 20 years. He said it would be great, but it's very hard. And he said there's very little. It's going to take years to get the supply of gold has not been going up, even though the price is higher. So there you go. Scott Gold in Scotland as well. Okay. Thank you, everyone. Thank you, Tara, for your super chat. You're welcome. And thank you, everyone else, for being here, for participating. And I'll talk to you later. Take care. Bye.